Dan Frishberg is Chief Investment Strategist at Frishberg. Is this your first time on Squawk, Dan?
Actually, I was on once before.
Oh, well, welcome back. It's good to have you. What do we need to watch today? And do you think we truly have moved on from worrying about credit? I mean, in the sense that we ignore everything else. Are we now getting back to really paying attention to what these companies are saying as earnings come out?
Well, the answer to the first part is yes. We probably moved on from credit. No, the companies are not going to give you good information. I suppose a bad report might be helpful, but it may tell you something. But a good one you're going to discount completely. And unfortunately, the companies' forecasts are notoriously wrong at inflection points. So you're not really going to get good information from what the companies expect. They don't know what their family's going to spend at the mall this weekend.
Yeah, I was going to say, looking at some of the Pepsi comments yesterday, I mean, they freely admit that these are forces out of their control.
Right.
And people seem to zero in on them maybe even a little more than they did Intel. And you're right, because Intel appeared to evade the worst of it this quarter.
Yeah, you know what is going to matter is going to be, if you look at the financials, that's what a market looks like that is ready to move up, because the sellers are exhausted. They're gone. People don't want to sell at these levels. And buyers are seeing compelling values, and they're saying, I don't care if it takes 10 years. I have to make money here. And we got something that can go up, but it can't go down. The rest of the market is much more problematic, I would say.
Yeah. How quickly can we reasonably expect credit to loosen up? I mean, if you have a lender who wasn't lending because of the credit freeze, right? Now some liquidity is flowing through the system thanks to Treasury. As a lender, aren't you now just as unwilling to lend, but for different reasons, because you're worried about the overall economy?
Yeah, you know, this is where you start hearing about pushing on a string. And I would say those are the most profitable words in the English language. If you think back to the last crash and recession, the pushing on a string talk, when they say the Fed's lowering rates and they're flooding the market with money and it's not working, that is your moment to buy. That's what we wait for, because it does work. Flooding the economy with money works. People do start using it.
On technical levels, what are you looking in terms of support and resistance on the S&P or the Dow?
It's really hard for me to tell that. I can read a little bit. I can tell you that I think what I'm looking at more than that is demand for stocks versus supply for stocks at this point. I want to know that the buyers, that we're at a price that buyers find compelling, and I'm not sure with the rest of the market other than financials we're there. And then I want to see a place where we get the sustained buying and it doesn't bring out sellers who wish they were out of the market.
Yeah.
I think a lot of the forced selling is gone, but now you got the people whose wives told them, you should have gotten out a long time ago. These guys are at some level are going to sell. When we get past them, then you got something to buy.
Yeah, they'll wait for a decent rally and then get out when there's less pain involved. Dan, good to see you. Thank you.
Thank you.